All right, welcome to bullwaves.org. This is Enda here. Check out the homepage at bullwaves.org and join the members area, and you'll get nightly Elliott wave analysis straight from my own brain. Okay, let's get into the weekly video. For those of you who are new here, I go through the markets from the Elliott wave perspective, a technical perspective. So I don't concentrate on news or really what's happening, apart from my own, musings that goes on during these videos. But all right, let's get into the patterns. Okay, this is euro dollar. This is the 4-hour count for euro dollar. I'm following this 3-wave pattern lower in a second wave, and I might suggest that you take note of this pattern when we get to gold. Okay, even though gold has made a slight new high today, but just take note of this pattern: a wave one rally and a wave two decline. I think there's still some strength left here in the dollar before we get a large third wave up in euro dollar. So there's a little bit of, I think there's another leg down to come in euro dollar, which does play into what might happen in gold. So here we go. This is the hourly count. You can see that's the wave A down. This is the 3-wave pattern in wave B. Pretty much worked to a T this week. We shot down in wave, I think this is a wave 1 of C. So I think we'll trace out 5 waves down as shown here. I'm looking at the kind of 102 area, 103, 102, that type of low for if wave C here matches the depth of wave A, then we'll get down to 102. But we'll see how it goes. Still tracking the possibility of a third wave starting today. Third wave's down. We'll see how it goes. The market's just opened. Well, no, it's open for a couple hours now. So we're just holding below the overnight high. Let's see if we turn down into a third wave, either today, Friday, or Monday next week, maybe. So let's see how that goes. Let's move on. This is cable here. So far, so good on cable. I'm not 100% sure whether we're out of the woods here for this first, run up here. Maybe that might be, that's the wave one top. Maybe we're still undergoing that second wave here before we run higher into wave C. So again, both in cable and in euro dollar, I am suggesting that we will get a another leg up to complete 3 waves up over the coming month or so. But I don't think we're going to see that happen just yet. I think we need a corrective higher low here to form. We've got a wave 1 up, corrective higher low in wave 2 before we rally in wave 3. Now, we should see this wave 2 form that higher low, I think, by Monday evening, maybe Tuesday evening. Just depends on how long this takes. The lower high so far seems to be a B wave. Again, we'll see how the pattern plays out, but in general, looking for a 1-2 pattern higher to indicate that the low is finally in, and we're looking higher in wave C. Let's go to dollar yen. You can see how slightly, this might be slightly, how to say, there's a word for it, I can't think of it, against the grain maybe. I am expecting a rally in dollar yen, which may go against what I've been saying in euro dollar and pound dollar, but is it possible that all three will rally together? It's quite possible. We'll see. Dollar yen, I think we've got a wave 1 done. I think we're in the middle of wave 2. So we've got wave A and B done, and I would like to see a 5-wave decline into wave C of 2. And I am looking at probably about 129 or so, to complete this decline. That would be somewhere down around the 78.6 retracement as well. So 129.50, that would complete wave C. And also around that area is where wave A and wave C would reach equality. So that would be a pretty sweet throughout decline, pretty standard, fairly deep, but second waves are usually quite deep. So I'm still suggesting further downside here in dollar yen for the early part of next week. But depending on how how long wave C takes, maybe most of next week, and then a rally to begin in wave 3. So we will see how this pattern develops. I know it's a little bit counterintuitive, but maybe I think it's still worth letting this play out to see if we do get a third wave rally. And that might be more to do with, yen decline, rather than dollar strength. But, relatively, we'll just see how it goes. Okay, here's the stock market. Getting through this quite quickly today. That 1-2 pattern worked out quite well. That 1-2 pattern worked out quite well. Will this 1-2 pattern work out well also? So it's a series of 1-2s is what I've been kind of concentrating on lately. We have only filled a trend channel down off the second wave high. If we go out, let's go out to the daily count here. So that's the second wave high there. This is the daily chart. You can see, let me get that chart shift on, forgive me, scale fix. Okay. So there's that 1-2 decline off that big fifth wave all-time high in January 2022. So the initial decline worked out quite well. Expanded flat correction into the middle of December. So that was a whole year cycle. Lower high in wave 2, and now I am suggesting that we are working our way down into wave 3, and that has begun with a series of 1-2 waves within wave 1 of 3. So I know it can be a little bit tongue-tie, but we've got a pretty solid pattern, I think, with the idea that this pattern must continue lower in wave 1 of 3 over the next, few weeks probably. If you get in the 4-hour count here, you can see that's the wave 2 high. We've got a wave 1 and 2, 1, 2, and then hopefully a third wave decline now developing in wave 3 of 3. And that would be leading our way down into wave 1 again. So it's, again, we work from the micro degree out to the macro degree. We kind of make an assumption or a best guess scenario on the macro level on what's happening, and then we kind of drill down into it to figure out the patterns on the micro level. So it's a constant feedback loop. The hourly charts feed out into the 4-hour charts, which feed out into the daily charts, which feed back into, the lower degree charts again. So, some people people give out to me about, changing my mind on a whim and that sort of stuff. I don't usually do that, to be quite honest, but something changes within the pattern which leads you towards another conclusion. So I cannot tell the future, which is, a shame for the moment anyway. I can't. But only God can do that. At this point, I'm working with this pattern. We seem to have a wave 2 expanded flat correction complete, and we're working down into wave 3. So I'm trying to figure out this wave 1 of 3, and that's where, this pattern has worked well over the last few weeks. So I'm just hoping that we continue to see the same pattern working well. So that's the wave 1 and 2 of wave 3 in blue, and this is the wave 1 and 2 of wave 3 in pink, and that's where we sit right now. Yesterday I introduced the idea that this was a possible triangle within wave, that'd be a fourth wave within wave 1. So we've got a wave 1, 2, 3, triangle, fourth wave, and 5. So we've got a 5-wave pattern down in wave 1. We've got a 3-wave pattern up in wave 2, 38% retracement level. And this morning we have an initial decline anyway, off a 3-wave lower high. So that 3-wave lower high may prove to be a death knell for this market if the pattern is correct. So if that is wave 2 done, then we should begin wave 3. This morning we've definitely hinted at that possibility. If we break the wave 1 high, low again, so that's 31, let's say call it 31,400. If we break 31,400 again, that would suggest that wave 3 is underway. And once wave 3 is underway, then we can, make assumptions on how low the third wave in pink is going to go. So each one step after another. If we take the initial projection for wave three in black, that would bring us down towards 3,300 again, and that's what I've been saying throughout the week. That's an initial target for wave three in pink also. So, let's see how it goes. If this pattern is correct, then next week is going to be another leg lower, stepping down into the inevitable reversal of a major hyperinflated bull market. Okay. So for the moment, let's keep our eyes lower in wave 3 of 3, and we'll see how the pattern works out. Obviously, if you want to follow this, join the website. Okay, gold. Now, my hand may have been forced today, but I still have this niggling thought in my head that another leg up in the dollar is going to give gold a hit next week. So you mark my words. Even if this bullish pattern is correct, I think we might threaten 1850 again before next week is out. Okay, here's the hourly count. The previous operating wave count is now switched to the alternate count. So let's see. We've got wave 1 possibly complete this morning. We'll see how that goes again. It's again one step after another. I noticed this kind of contraction within the range over the last few days, which has kind of complicated matters for me. But it could have formed a triangle, pretty standard triangle, oscillating around probably 1920 or so, completing yesterday at yesterday's lows, and then a rally out this morning in wave 5. So this could be 1, 2, 1 and 2, and then third wave high, fourth wave triangle, and a pop up into fifth wave in wave 1, and then we come down next week in wave 2. I am a very long-term bull in gold. Let's get this second wave out of the way. That'll be let's end it at that. Okay, here is a daily count for crude oil. This pattern has worked out quite well this week. A third wave decline within wave 3, so that'll be wave 3 of 3 decline. Wave 3 of 3 of 3 probably, and the action this week has definitely hinted at that. There's been pretty much no answer to the decline. And if you go back into the last couple of weeks, you'll see where I've been pointing out these second wave lower highs, and looking for a third wave decline to confirm the pattern. And this week we get the third wave decline to confirm the pattern. Now I think there's still that possibility of a B wave expanded flat, but maybe this week's action might prove a little bit too much for that alternate count. But for the moment, we're working with a third wave within wave 3. So it's 3 degrees of third wave declines. And this morning, last night I was pointing out a possible fourth wave lower high at that 69.80 level, around 69, whatever it was, 70 that I was pointing out. And we've turned lower this morning, and we just pipped below previous wave 3 and bounced again. So it looks like we have wave 3 most likely done now, depending on how the rest of the day goes. But wave 5 of 3 may well be done at this morning's low. So we'd look for a correction higher over the next series of days, series of sessions, maybe into the middle of next week. We get up in wave 4. It should be reasonably corrective, I think. Quite choppy, maybe generally sideways, maybe even a triangle. Wave 4. So over the next few days, probably a challenge about $71, $72 again before taking the next leg down into wave 5 of 3 towards the lower 60s handle, so about 62, 61 maybe, complete wave 3 down. So the pattern working out quite well this week, bouncing this morning, possibly completed a third wave of wave 3, in green. Maybe we're going to bounce higher in wave 4 early next week. So we'll track that as it goes. Okay, that's crude oil. Let's move on. you know, I mentioned it during the week there in the updates, but throughout all this decline, series of declines in crude oil, was the elevated level of stress over um, inflation, and the effects that inflation was having on the economy. And the one thing it wasn't affecting, forgive me, was crude oil. You think the one thing that it would be affecting would be crude oil. Energy prices in general, at the commodity level anyway, have been declining and declining for, well, we could call it that second wave lower high there since June 22. So the last 8 months been pretty much straight down, and this week has been no change to that. So why won't the prices at the pump change? Okay, so I think that's a very large degree B wave that's topped out now, and we're heading down into a C wave. So it's a crash for the oil industry again. Okay, let's move on. This is the S&P daily count. There's nothing really to see on the daily count apart from the 1-2 pattern, that's been developing. The 4-hour count, here you can see wave 1 in green, 3 waves up in wave 2 into that failed 5th wave. What was that, second week of February there, and now we've been moving lower ever since. Tracking a 3rd wave down within wave 1 of 3. So let me just push this count on a bit. Wave 1 of 3 should probably retrace most of what happened in the second wave rally. So wave 2 in green should be mostly retraced by wave 1 of 3. And that's what I've been tracking over the last week or so. I think off wave 2 in green, we've got wave 1 and 2 and another 1 and 2. So a series of 1-2s yet to be confirmed, but we should be moving into an accelerated phase in wave 3. So far, wave 1 and 2 of 3 have, made progress to the downside. This morning, whilst yet to be, the initial decline is interesting. It's yet to be confirmed that wave 3 of 3 is underway, because I would really need to see break of 3,800 again before confirming that wave 3 of 3 is underway. But that's the outlook for the next few days anyway, is 5 waves down to complete in wave 3. I'm looking at a target down around 3,700 at a minimum, I think, for wave 3 in pink. Could go lower, so we'll see how that goes. I would say that the wave 2 high here at 40.78 must hold as this pattern develops. Okay, let's get on. Here is silver. We've been tracking this 1-2 pattern for the last week anyway. I think we're coming off the boil of that wave 1 rally, when we're going to see I'm kind of hoping it's going to be a pretty deep retracement in wave 2, but we'll see how it goes. We have an initial rally in wave 1 off the wave 2 low. So this should all be beginning of a large 3rd wave advance, if I'm correct. I always have to put that caveat in there. But initially this week, the decline in wave A was 3 waves down. What we can make out so far today is that we've got a B wave lower high, and we've got 3 waves up. So I am suggesting that we return lower again later this week, later or towards the early part of next week. So Monday and Tuesday, we return down into wave C of 2, and I'm looking at about 20, break of 21 anyway, maybe down towards about 2050 would be a solid serious retracement in wave C of 2, and that should wipe out most of the exuberance in this rally here. So I would look for a decline in wave C of 2 next week, and we'll track it day by day, see how it goes. Okay, move on. Bitcoin. I know you're going to be shouting at me in the comments for my comments on Bitcoin, but again, long term, I don't see any difference on this. This is a 4th wave completing a long, drawn-out fourth wave, over a series, at least 10 months now of sideways action in Bitcoin. And of course, as we break out to uh, you know, a meager, high for the correction, for that corrective pattern, of course, the crowds come out and say that Bitcoin is the best thing that ever existed. The cries earlier on in February were that Bitcoin was the best performing asset in 2023. Let's just completely disregard what happened over the previous 2 years, eh? Why not? Okay, so don't go, selling your gold rings just yet for buying Bitcoin. Don't go selling your grandmother's, jewelry. There's another big leg down to come in Bitcoin. It may come along with the outlaw of Bitcoin. Who knows? We'll see how it goes. Okay, let's move on. I go to the NASDAQ. I think we had a bounce in the NASDAQ yesterday, which was, it's been a pretty sideways corrective looking pattern. I haven't, made much of an attempt at, labeling this as an impulsive decline just yet because I hadn't seen enough, or I hadn't seen, let's say, substantial enough decline off that wave 2 high to indicate that wave 3 was underway. It was all the way along. It seems quite, I'm going to say corrective, but yeah, pretty corrective. Even though we did make new lows again last week, but we've bounced quite well this week. Maybe the oversold nature of the market was kind of due a technical bounce, but I still think we have to confirm a decline into a third wave. The tech sector has, let's say, well, the internet tech sector, or electronics tech sector, has, let's say, so far bucked the trend that has emerged in the other two, or the wider market. But it will eventually join it. I don't know if people are running into, Facebook again just because, they fired a few people last week, or, they've been trying to cut down their numbers. Yeah, I don't see that as a. Obviously, it attracted some sort of, a run in the price or a rally in the price in the fangs, but we ain't over here yet. I cannot confirm just yet if that is the wave 2 high just or complete at that previous top, but I wouldn't rule out the idea that this is some sort of a wedge decline in wave 1 and this is an expanded flat wave 2, just as a pattern strange enough to attract people in and, lethal enough to completely wipe them out with third wave decline. And that, if the third wave decline does materialize like I think it will in the wider market, well, then the NASDAQ is not going to buck that. It's going to go with it. So let's see if that is an expanded flat correction, is the second wave. Let's see if we get a turn down into a third wave next week. Is there anything else I want to talk about? French market, it's pretty much following the wider market, stepping down into a third wave, I think, this week. Euro stocks, yeah, topped out at a lower high this week and should turn down into a third wave pretty soon. Hong Kong, it's turning down pretty vigorously right now. I don't see this materializing in any other way than, wave 3 wipeout markets. If the US goes down, I think the rest of the world is going to go with it. And that seems to be the way it's looking right now. Okay, so I usually finish every presentation I do because I know that I'm going to have to answer to God sooner or later. Hopefully sooner, who wants to hang around here longer than they have to? But God, use me as you see fit, not me. Not my will, but thy will be done. So here I am to point out the gospel of your salvation again. So Jesus came, died, paid for your sin, died on the cross, paid for your sin, rose 3 days later. It is the most documented historical fact. The most documented ancient historical fact. Has the most corroborated accounts. And from that, from him taking your sin to the cross, dying, taking your sin into the grave, and rising again, leaving your sin behind him. If you believe in that, that is the gospel of your salvation. Believe. That's what he said himself. Believe in the Son of Man, and you will be saved. All who call on the name of the Lord will be saved. And my Jewish friends out there, you've been looking for your Messiah. He was there right along. And I know that you've got the Mishnah and the Talmud and all that and the oral law, which says, it couldn't have been Jesus. Or, cursed is a man who dies on a tree. Yes, cursed is a man who dies on a tree. Because he was cursed with your sin. He took it to the tree and died and paid for it. All you have to do is believe in it. Abraham believed God and it was counted to him as righteousness. So there you go. You believe in the Messiah, who is God, present on earth, and then you're saved. I'll see you in heaven. Okay, that's me done for the week. Go join the website. I'll see you tonight. Until this time next week, if I'm still here, YouTube land, I'll be back. God bless. Bye-bye.